Good morning, this is Ron Brown again. It is Friday, February 24th, 2017. This is the second in my videos about how I approach the market using HGSI Investor. And I want to emphasize that in this video anyway, that the best approach to the markets is the top-down approach. And you may wonder why that is. Well, according to studies, and these are not exact figures, 60% of a stock's movement is determined by what the broader market is doing. We've seen this many times in recent years. For example, in 2008, when the market began to melt down, I mean, there was really no place to hide in that market. And I think that 60% number was a little bit conservative. Now, in this market, with everything going up, we can see the reverse effect. Most stocks and groups have been going up, and that is the beauty of using HGSI Investor, because it is built around the top-down process. Now, I'm going to open up what we call the Designer module, and there are 4 modules here. The Designer, the Warehouse, which is behind, the Charting module, which is self-explanatory, and the Ranking module. Now, I primarily use the Warehouse and the Charting modules, but the Designer comes into play every day because this is the data repository of HGSI Investor. Now, all of these groups up here with the yellow, red, and green icon, these are data folders which are updated by the data providers. Now, these cannot be altered, but anything down here in the user groups can be altered. We also have the smart groups, which are groups of stocks which are created by filters and warehouse views, but let me just say filters for now to avoid confusion. And then they are ranked according to what we call a combo ranking, and that combo ranking is made from fields which are available in the warehouse view, and I'll explain that as I go along through this series of videos. Now, what I've done, and I did this many years ago, my former partner and I, unfortunately he passed away last year, were Woodward and Brown, and these are groups that I've put together and I maintain over the years, and the groups are best analyzed through the warehouse view. Now, this is a warehouse view, and you can see that there are multiple fields in here. And by sorting on this combo ranking, and this is a combo, I may as well show it to you right now. It's a very simple combo, and I call it strong trends up, and I weight the different moving averages that I use according to they're equally weighted, 25% apiece, and this brings the groups which are the strongest to the top of the list, and you can see that over here. These are BPA Trends. Now, the trends are based upon mathematical formulas, and the Dow Jones Industrial Average, when I'm sorted on this field right here, the raw combo rank, it takes this information that I just showed you, and it with the weighting, it'll bring the strongest indexes to the top of the list. And you should not be surprised at this time that the Dow Jones Industrial Average is the strongest index. It's out to an all-time record high. Now, this is a chart that I'm using today, and it contains several fields, or several windows, I should say. These 2 windows at the top are the force index, and the force indexes are a price and volume indicator, and then they're smoothed with an exponential moving average. The top view is the force 13 period, and what it is, it's today's volume today's price minus yesterday's price times today's volume. And then it's smoothed over 13 days. So it isn't as jumpy as the 2-day force index, which is today's price minus yesterday's price times today's volume. The original force index concept was developed by Dr. Alexander Elder, but we've modified it. We use it a lot differently than he does, and it's worked very well over the years. We've had this in the software for years, probably 12, 13 years now. As I go down through this view, you can see that there are many dots in here. These are volume price analysis flags, and each one of these has a specific definition behind it. The definitions are in the help file, but also you can just click on these, click on one, and the definition will appear over here. So let me see if I can click on this, and I did, and you can see that this magenta square is a low volume test for the Dow Jones Industrial Average. What that means is that the volume on that day was relatively less than the previous volume, and the index closed at its high after trading down. So that was a test for supply. These are all BPA terms. You can see how powerful this latest move has been, because it went through a little consolidation period here, and then we had an effort to rise, another effort to rise, another effort to rise, another effort to rise. These are all BPA flags, and they're very powerful flags. Now, this was a low volume test for supply, and this was a confirmation of that test when the Dow gapped up and moved higher. Down here in this area, these are pocket pivots, which were developed by Gil Morales and Chris Casher. And then in the lower window, I just added this this morning, and I'll distribute this to my Insider Club and webinar participants. This is the volume point of control. When this goes from rose to green, and it lasts for several days, that means that the bulls are clearly in control. Now over here, these are fields which are contained, or they're all in the warehouse, available in the warehouse views also, and I just created this window, and it gives me all the information that I want to look at immediately. You can see that this volume point of control, which is green down here, it's also green over here, the lettering, and that crossed over 21 days ago, which would be back here. So the bulls are clearly in control of this market up to this point, and we'll see if that lasts or not. But this is why it's important to look at these charts. Now, the Dow only represents a small portion of the market, and that's what the public and the press generally look at. Everybody feels great if the Dow keeps going up, but the Dow is really not representative of the market. Now, the last BPA signal was 3 days ago. 0 is the crossover day. So this was actually 22 days ago back here, and that VPA signal condition was an up bar closing near the high, which is right here, which is a confirmation of that test. Now, I'm throwing a lot of information at you, but this information, once you start using HGSI, it really is intuitive, and if you don't know what a VPA flag represents, you just click over here. Now, this blue line up here also represents the volume point of control. You can see that the price went above the volume point of control right here with this effort to rise, and if you look down here at the bottom, that's when it turned green here. It was in a consolidation period before that, and now it's in an expansion period. What I look for is the expansion, contraction, or consolidation, and then an opportunity to buy as it comes out of the consolidation area. If I'm looking to go long, I want to buy when it breaks higher. If I'm looking to go short, I would sell when it breaks down. So anyway, this is a very useful chart, and there are several charts in here, but I don't have time to cover all of these in a video. I just want to point out how I use this. Now that's the Dow. Now let's take a look at the SPX. The problem with the SPX, it really doesn't have volume associated with it, so the BPA signals or flags will not work. So I'm going to move down to my next folder. It's a major markets ETF. So the first folder I should explain, I call this my major markets plus because it's a mixture of the indexes plus some ETFs. I just wanted a quick view comparison of what's going on. So if I sort on the percentage price change one day, I can see what happened yesterday, and you can see that oil was up. Now the program is updating. I want to turn off the intraday for now because I'm looking at end of day. I'm going to drop down the major market ETFs, and let's take a look here, and you can see that when I sort on the percentage price change one day that the VIX was up a little bit. The VIX is the volatility index, which is a essentially some people call it the fear index. And when the VIX is real low, options premiums are low, and there's a lot of complacency in the market. But it's been inching up a little bit. What I want to do though is I want to go down. I'm going to sort by symbol so I can find this a little bit faster. And here it is. It's the S&P or the SPY, which is the ETF for the S&P 500. It has volume associated with it, and you can see that it looks very similar to what the Dow is doing. But this is more representative of a broader cross-section of the market. We don't have the grouping of pocket pivots, but there are several pocket pivots here going back to this date. I'm going to put a crosshair on, and that's when it really started moving up. And at the same time, notice that the volume point of control went positive. The 13-day force index was already positive. The 2-day force was positive, but it pulled back here when the market pulled back. But the VPOC remained positive. You can see that volume has been good, and the quickest way to tell that is just to look at these blue bars, which represent the pocket pivot. So it's been moving up on volume, been stalling a little bit the past few days, but the strength has been there. Now let's look at the power shares QQQ, which is representative of the NASDAQ. Now look at this move. It's tremendous. By the way, these blue lines are support and resistance lines that are drawn in automatically, and the power shares representative of the NASDAQ 100. This is an extremely powerful move. Yesterday there was some selling at the top, but you can see that buyers stepped in and brought it back to, let me zoom in on this, about the halfway mark. Well, here's the range right over here, not quite the halfway, 42.97%. So the bulls are still in control of this market. Now there haven't been many signals, many VPA flags. These were negative, effort to fall, and then here was an effort to rise, and it stayed in effect all this time. The volume point of control remained green, and the several pocket pivots, just this little pullback here for negative pocket pivots, but that was soon reversed, and the blue line, as I said before, represents the volume point of control in the market, or the QQQ I should say, stayed above that. The trends are all long. The most recent VPA flag was a no supply, which is a sign of strength, and you can see that that was another good flag. And that information is also over here. No supply sign of strength. It actually happened 5 days ago, 0 being the crossover day. So we're seeing all kinds of confirmation in the Dow and the SPY and the QQQ. There's just not a lot of weakness. Let me close this, and you can see that there are some groups that are going down, or some ETFs rather than groups, and gasoline is one of them. You can see that these red lines represent resistance, and just below that, natural gas, because of the generally warm weather across the U.S. I assume that that's the reason that the natural gas has fallen so rapidly. Now this is a very gappy chart, hard to trade, and you can see that down here with the volume point of control. It's in and out all the time. I pretty much stay away from this, but it would have been a great short after this gap down, because it could not get past that resistance area. Now I don't want this video to get too long, so I'm going to end it here. I'll come back and do another video and continue with this explanation of top-down top-down prospecting, market analysis, and so on. Thank you for listening.